is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We gonna take it by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
Yeah.
holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're up 5 days a week. We go 7.5 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We have the Dow Industrials right now up 860, NASDAQ up 227, S&P's up 94. That's a gain inside the Dow Industrials of 3.3%, 2.8% in the S&P's, and 2.6% in the NASDAQ composite. Gold contract down $4.30, trading at $16.40 an ounce. We get silver up 5 cents, $17.18 an ounce. Light sweet crude off 21 cents, $46.97 a barrel. And that's what we had, a slight build inside the oil market out here today, and they were expecting a huge build, and oil still couldn't catch a bid, folks. Pretty amazing. Notes and bonds. You get the 10-year note. Trading up 6 ticks, 136.06. The 30-year bond down 2 at 173.09. We broke 1% out here yesterday as well as today on that 10-year. That 10-year is still on an ABC structure on the way down. Price projection is just slightly over 0. We'll see how this is going to be. Baby's going to shake out. King dollar up 186 ticks, trading 97.339. Your euro is at 111. The yen is at 107.5, and the pound is at 128 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we take a look at the futures first. What you're going to see is that we're banging right up against the downdraft that was established, or the updraft and the downdraft, okay, when Powell came on at 10 o'clock yesterday morning and reduced the short-term rates by 0.5%. The top of that level is 3,137, and the bottom line is that this S&P, we're basically coming into that area. The bar is so huge. The bottom part of it is 3,056. Right now, you're at 3,092. And we'll see whether we can basically get into that number. What did happen out here today, folks, is that the volatility did slow down. We're up 96 points, but the volatility did slow down. You can see what the market was doing. If we go back over to 8 o'clock in the morning, you're going to see you had a price spread of about 40 S&P points. Pretty wild when I'm saying the market slowed down. You have a price spread of 40 points. But the bottom line is that for what we've had, was a slower move. Then you broke topside at 1250. When we did break topside, by the way, folks, okay, the bottom line, there was no volume behind that move. So right now, your probability is that you can get back to 3,070 pretty easy. And that would be where that's 24 points lower than where we are right now. So we'll see how this is going to shake out coming into the close. Some of the higher volume equities out here, and we haven't had, by the way, when I say coming into the, we haven't had a sell-off all day, really. So we'll see if the market's going to hold it. Or in fact, bottom line, sell down a bit. Some of the higher volume equities out here today, you get Advanced Micro up $2.60. Apple, big number, up $9. Yeah, Microsoft up $3.20. Micron Tech's up $2.87. Citigroup is up $1.28. Intel is up $2. So you can see those chips. They're on the move once again inside the NDX 100. Bottom line is that you get Vertex Pharmaceutical is the strongest out there. That's up 7%. You get Seattle Genetics is up 6.5%. Take-Two Interactive is up 6%, and AMD is up 5.7%. Taken away from it, a dollar store, a Dollar Tree rather. That's down 4%. Tesla's off 1.3%, and you get Fox off 1.2%. We go inside the Dow Industrials. We take a look at the Dow Industrials, the strength versus the weakness inside the Dow. And I believe every Dow stock is going to be positive. Let's just see. It is. This is pretty wild. So every Dow stock is positive right now. Right now, your biggest contributor to the 900 points up in the S&P in the Dow Industrials is United Health. United Health is putting 191 of those points in. Apple's putting 67. Home Depot putting 64. 3M putting 52. The least amount is Boeing. Boeing is putting 1 point. ExxonMobil is putting 3.7 points. So bottom line inside that Dow, you can see the way the weighting structure is in the Dow. There's no doubt that you're talking some big numbers here. Gold contract. We go take a look at the gold contract. What you have with the gold contract out here, you get a sideways movement out here. You're down $3.70. We are trading 1640. 290,000 contracts traded. Yesterday was a monster day in gold. It got over the high that was established out here on January 8th. That high is a 1619. Bottom line has it with price. I expect what you're going to see out here is you're going to build a bit more cars, go after the high of 1691, and get into that $1,700 area. Silver. Let's go take a look at the silver market out here. Let's see. That's not going to be it. SIH. No, SI. Sorry about this, folks. SI1 will go like this. Okay, so let's see this. Okay, so we get the silver market up. We're up 4 cents. We're trading 1723. Now, silver, folks, has to get back inside base 1751. You know, we got inside one zone, but 1751's the number. Silver got totally smoked last Friday. Went down $1.40. Went from 1788 down to 1640. Monster number. Notes and bonds. Bottom line, note and bond market, they just want higher price. This is just a relentless move higher. Straight line move, no two ways about that. You still got plenty of buyers out here. We are at 136.04. Yesterday you hit a high up here of 136.30, and that baby wants a much higher price, lower yield. You know, flat yields are coming at us in the 10-year. Dow Industrials up 892, Nasdaq up 238, S&P's up 98. We're coming right back.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow up 900, NASDAQ up 240, S&P's up 99. United, folks, airlines, I mean, can picture why they're having such a tough time. There's no two ways about that. They are going to be cutting back flights, freezing hiring, and halted merit pay raises as it grapples with this coronavirus. Okay, so the domestic schedule is going to be pared 10% in April. International is going to be chopped by 20%. They're also imposing a hiring freeze through June 30th, and they're deferring merit-based salary increases for management until July 1st. Bottom line is that these large companies and small companies are going to have to save their cash in a huge way. No two ways about that. So let's go see what Goldman Sachs and BlackRock says about these treasuries. The treasuries that I'm saying I suspect are going to go to just about zero. So let's see. Veteran investor Scott Menard caused a stir in the bond markets earlier this week when he voiced what to that point has been outlier view, predicting that Treasury yields would turn negative. Okay, so the first guy saying it's going to turn negative. His call was echoed by senior market watchers, such as a couple other guys, and drew more attention to the 10-year yields as they dropped below 1%. BlackRock's Bob Miller won't rule anything out in markets thrown into turmoil by the pandemic, but as the head of a fundamental fixed income at the world's largest money manager, doesn't see treasuries joining the $14 trillion pile of negative yielding global debt. His quote, "It's very unlikely," he said in an interview Tuesday, "it would take an absolute collapse of the economy, a clear shutdown of economic growth without confidence that there are significant policy support mechanisms behind it." You know what's wild about that quote there, folks? Okay, we've just lost. We just went from 1.6% in the 10-year to 0.90. So it's like I don't quite understand when he says that it would take an absolute collapse. We don't have an absolute collapse in the economy now in 30 days, and we've already gone down from 1.6 to just under 1. So let's see. So he's from BlackRock. I believe they're going to have another guy in here. Okay, let's see. Okay, so Okay, here we go. So Zach Pandel, a global currency strategist at Goldman Sachs, said that since the U.S. curve is mainly shaped by monetary policy, even powerful rallies will struggle to drive rates substantially below zero unless the Fed adopts a negative target rate. On Tuesday, it lowered the target rate range to 1 to 1.25%. It's pretty amazing. The negative rate is something that Miller and Pendle both reckon the Fed won't do, in part because it would cripple the $3.6 trillion U.S. money market industry and because the policy hasn't fared well in other economies. Here you go. Market forces can push down the yields at the front end of the curve to a degree, but without a central bank going into negative territory, it's going to be hard to sustain, Pandel said. Well, that being said, folks, what has happened is that the market itself is the one that has forced the Fed's hand. Bottom line is that whoever think that you'd be at 0.90 or 1 as we are today, the market forces are the ones that basically have pushed the rate down. Certainly, they're way ahead of the Federal Reserve. The Federal Reserve came down a half a point yesterday, but this has been going on for quite some time. I mean, big time, too. The XAU and HUI, so gold as well as the gold equities, bottom line, got back in the higher range out here. You get the XAU trading $100 and 2 cents. Anything that's inside of the 99.42 gets you in the higher range. We take a look at the volume characteristic on this. Good volume, too. We did, yesterday, you did 78 million shares. Now, when you were coming down, you were going against 68 million. Oh, it was pretty cool. You're going against 68 million. Yeah, bigger volume, too. I wasn't expecting that, especially on the first get-go on the way up. But that's what we did get. If we go take a look at the Gold Bugs Index, that's up $1.54. That's also in the higher range right now. And what we have there, that also came in with volume, big volume too. That we did 60 million shares there going against 50. So what I expect you're going to see there, you are going to end up building more cars to get up and over the last high that was established out there at the 16.19. Let's go to Steve in Reno, Nevada. Hey, Steve, what's going on?
Hey, good afternoon, Tom. How are you, sir?
I'm doing great. Yourself?
Can't complain a bit. So I'd like to congratulate you on your great bond and note calls. You've been on top of this since day one. And, of course, you're in the real estate business. So I guess that leads me to a question. What do you see as the bottom in mortgage rates in the 15 and 30 years?
Well, it's intriguing. And I'll ask Bud that question when we get on Friday. So I get Bud Spriggs on every Friday now, doing a mortgage update at 3:15. What he was saying last week, this is intriguing. And I was talking to Bud this morning. So the way that mortgage rates normally go, folks, is that they're pegged off the 10-year rate. And they've normally been pegged approximately 1.75 to 2 percentage points above the 10-year. When I had Bud on last week, the bottom line is that he was explaining that, Fannie Mae, Freddie Mac were not going down as fast as the 10-year was going down. So it's pretty intriguing because normally and I can understand it like at the very beginning, because what seems to happen is this, is that you get a jolt, whether it's on the way down or the way up, and they don't move like immediately, but they do move within like 5 to 7 days. So right now, he said to me this morning that it was 3.34 was basically with good credit, that was kind of the best you could get at this particular point. We'll see where this shakes out, and I'll be happy to, let's see, he'll be on Friday anyway. But my take is that, on my own refinance, I can tell you what I'm going to do. And I'm at 4.35. And, right now would be good. I understand that. But my head is that we are really going down into that level, meaning just over zero. And that's when I'm going to basically try to refinance. I just refinance, you know what I'm saying? So, and if that's the case, if the formula is there, it should be almost at 2%, So, that's on the 30-year. That's what I'm talking about, too, by the way.
I don't lean as far as 2%, but I think 2.75 is doable, or something under 3 anyway.
Yeah, which is, and What very well could happen, Steve, is what Bud said last week, is that they just might say, okay, I'm not going any lower. Now that hasn't happened in Europe. Okay, as the rates have gone down, the rates went negative. Guess what? In Sweden, there was negative rates in mortgages. So, that hasn't happened. What has happened is that the mortgage rate has gone down as they have gone negative. So my take is that this is going to happen because the finance business in general is so large that, let's say, if you have business, I have business, someone else has business, you're going to want the business. So you're going to say, hey, I'm working on a 2% spread. They sell the paper anyway. It doesn't matter to them. They're making 2%.
Yeah.
Cooking, brother.
Yeah, they roll it out. They roll it out as quick as they write it.
Exactly. Thanks for the call, man. Have a great
Take care, buddy.
Okay, thanks, man. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 1,014 points. S&Ps are up 113. NASDAQ is up 279. Monster numbers are right across the board. Percentage-wise, folks, let's see what we have here. You get the Dow Industrials up, going to be 4% any second. You're at 3.9. NASDAQ up 3.2. S&Ps up 3.1. Inside of the presidential elections out here, you had a lot of movement last night. No doubt Biden has got the momentum. Bloomberg has suspended his campaign, backed Biden. That's going to be a big number. There's no two ways about that. You have Warren that's still in there. Her camp is saying that she's reassessing her path forward. You know, we'll see where she goes, meaning bottom line, she came in third in Massachusetts, and she's the senator for Massachusetts. So I can't see her basically staying in the race. I think the question is going to be, does she support Biden or Bernie? That's how I suspect that's going to break down. You know, it's interesting. One of the larger funds that most of us know in this business, this is Ray Dalio's Bridgewater Associates. He took quite a hit here. You know, last year, bottom line, he had a weak performance, which is almost unheard of for this fund. I believe this is one of the most successful funds ever, folks, on a longer-term basis, on a much longer-term basis. But the bottom line is that he took a hit last year, and bottom line is that all the numbers are in for February, and he's down 8% this year. So that's a fairly large number. You know, it's not a large number if you're just in a mutual fund, and the bottom line, you're a long only. But you know, the bottom line is that these larger private equity funds, hedge funds, they're supposed to basically not be delta neutral, but have some types of positions in place for downdrafts such as we had here. And it looks like in this particular case that hasn't happened. Airbus, of course, Boeing's largest competitor. It'd be interesting. You know, Boeing is not getting hit that bad today. Not at all, actually, but it's not up either. So if we go take a look at Boeing first, you're going to see Boeing's trading, up $1.45. You're trading $2.82. And if we look at this, I believe the number, let me look at this, because I was looking for a high volume right there. So 246 is what I'm still looking for on Boeing. We get down to 269 last month. 246 looks to me like where it's going to shake out. Now, that being said, of course, inside the Boeing story, everyone is waiting for the FAA to turn around and say, okay, the 737 MAX is ready to fly again. Well, when you look at this Airbus story, it's kind of intriguing because Airbus is considering a cut in production of its A330 after its biggest customer for the wide body said the coronavirus has driven travel, of course, down further, and they wanted to defer deliveries, okay? So the European plane maker is reviewing its production plans and may make a decision as soon as this month. I suspect, guess what, folks, okay? The way this airline business has got basically taken out, there's no doubt that it's pretty heavy, you know? And that's something that, you know, no doubt, you know, will come back, but the real question is going to be when. Because what we have had, you know, each and every hour, you have larger places that basically shutting down, you know, flat out. You got, let's see, so okay, so right now you're up to basically worldwide 93,000. A lot of these. What happens is that this must be pretty strong for some of the folks that actually have it, because when you're around someone that actually does have it and looks like that has been in one of these infected places, it seems like it travels pretty quick. I mean, they had the New York family, you know, the attorney had got it, come back from Asia. 3 members got it immediately. The guy that drove him to the hospital got it. Pretty intense. So I think it really depends on number one, where they got it, and probably how strong it is. State of Washington, that's a big number. The amazing part of the state of Washington is that, you know, you've had 10 people die in the state of Washington. I mean, so that is totally a very large number. California, just about an hour ago, just reported its first death. Italy, they're closing their schools until March 15th. That's really smart, man. I mean, because in Italy, there's no doubt that thing came in fast and furious. Bottom line, have to close it. LA's, they just reported 6 more. You know, Tommy and I were talking about this morning. Now, this is going to be a trip, this one. So what you have, folks, is all these international exchange students, meaning students from our USA going overseas, going to school there. Many of the colleges are now calling them back. When the University of New York, bottom line, they just called back 300 students. But check this out. And these students have been studying in hard-hit spots: China, Italy, Japan, Iran, and South Korea. Bottom line, though, they're calling them back. They're going to put them in 14 days quarantine. But you know where they're putting them quarantine, folks? In their own dormitories. I don't think that's too bright. Bottom line, as I said to Tommy this morning, I couldn't picture 20 years old, right, 21 years old, that you're going to say that, okay, I'm going to stay in the dormitory, I'm going to do nothing else. These dormitories in these large schools, there's thousands of kids, right? It's like, really? I just don't see it. I think that's the quickest way to. It's almost like what's intriguing about that is that it's like, why even bring them back at this point, right? I mean, that's we'll see, but we'll see what this whole baby's going to shake out. Market-wise, bottom line is that, you got some stability out here intraday, and once that stability came in, this thing does want to test the highs that were generated out here yesterday, and that high was 27,084. You're almost, well, you're not. Yeah, you're almost there. I mean, you're 100 and something points off it. And when we're talking about 100 and something points in a market like this, it's not a lot. Microsoft, we take a look at Microsoft now. Microsoft is something you can keep your eye on. It should keep your eye on. The reason being is that Microsoft, folks, before this pullback, was one of the strongest equities in the marketplace, period. Made an all-time high of $190. Gets down last Friday to $152. Microsoft's going to need more juice. There's not buyers out here today. There's only 33 million shares, where yesterday we had 71 million. That's not a good indication that Microsoft wants to stay into higher price. We go to Google. Let's go take a look at Google and see where Google's shaking out. Google right now, a little bit of action. Up 39 bucks. You're at 1.3 million. That could use a lot more volume also. Amazon, same thing. So it's intriguing here, folks, is that what you have here is that you got volume and a spike yesterday. You're getting a spike today, and I expect this is going to hold. But bottom line, you are not getting the volume. The volume is dying on the vine as we're getting up to these prices. Stay right there, folks. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow's up 1,054, Nasdaq's up 284, S&Ps are up 118. So Apple's up $10.65, and you talk about this just came across the tape, and Apple hasn't moved on it at all. But the bottom line is that Apple has just warned its retail employees about shortages of replacement iPhones. The company recently told that their technical staff, this is the genius pools, when you go up into these stores, folks, that replacement iPhones will be in short supply for as long as 2 to 4 weeks. Some Apple stores have also already noticed a shortage of individual parts, according to the employees who asked not to be identified. So part of this, the first part of that, folks, that I read, bottom line is that they're saying that, yes, okay, they have shortages. The second part, these are just employees that do not want to be identified. Bloomberg had already come out and said that, I guess, the iPad has already there's been shortages there. And in Apple's case, okay, so the supply of iPhone 11 has began to slightly tighten internationally. So we'll see where that shakes out. There's no doubt, man, the supply chain was down totally for about 6 weeks. So there's going to be some problems out here. Apple has 42 stores in China. They had to close all of them at one point, but they do have 38 stores that are now reopened. It's going to be the supply chain more than anything, though, and that's where this disruption will come in. And we'll see. It will hit the bottom line. Let's see, January, February, yeah, and the bottom line. But I suspect you're not going to see this probably for a few more weeks, and then it's really going to be a question of those companies assessing the amount of cash that they won't take in on a gross level, and they'll end up, bottom line, letting us know in the aspect of where they think their earnings are going to come in. So if we go over to Apple just for a second, I'm just curious. I believe we just went by their biggest quarter, and yeah, that would have been their biggest quarter, the last quarter. So they did $91 billion last quarter. They're looking to do $61 billion this quarter and take $2.70 to the bottom line. And you can see it's every year. This is how Apple runs, though. It's a dramatic drop. The way their fiscal year is set up, they make sure that their fiscal year is basically the first quarter, which encounters the December quarter. That's how this works for them. So they're basically off a calendar year by 3 months. That's how it looks. So we'll see if, in fact, bottom line, less cash is going to come in. I suspect less cash is going to come in. If we go over to Home Depot, it's going to be interesting. Let's look at Home Depot for a second. So Home Depot is up $11.34. This baby, you talk about a run from, look at this, So Friday, you're at 217, 212 rather. You're at 239. I think they might have come up with numbers there. Yeah, let's see here. No, they didn't. 1 second. Because what's going to happen with Home Depot now? Home Depot. What I want to see with Home Depot first, I'd love to see them test the high. Because watch this. This is a high volume high, I believe, and you need to get to test the high first. So a high out there. Okay, so we're really right next to it. Yeah, test the high of 247. Because once you get the test that high, I expect that what you're going to see is that Home Depot as well as Lowe's, they're going to have some supply issues. Because what you had, never mind just the aspect of the factories that were closed, folks, you had some of those ports that slowed down tremendously. So picture, when you get a Home Depot or Lowe's, you get the factories that are in China. Factories get everything in a container, get them to the ports. Ports get them into the U.S. Supply chain goes from the ports, of course, into all those stores. Bottom line, what did happen, which is probably good because when it happened, is the lunar year. So the lunar year in general, everyone that does business in China knows that all the factories close for 10 days anyway. So you're going to order more before that fact anyway. So they probably had a decent supply. They should have, I'm sure they do. They do this all the time. They had a decent supply. No one was expecting that, yeah, after a month, the factories still aren't open. So what I'm looking for in both that Home Depot as well as Lowe's is a, let's see if Lowe's wants to do a retest. I want to see a retest of the high on lighter volume because I suspect what we are going to see is that when those numbers come out, I think they'll be shot. You know, not this quarter, next quarter. Lowe's came down from 126 to 102. You know, we're trading 112 right now. Same setup. Wayfarer got absolutely smoked. I mean, they came out. Now, the difference, I would say, in a Wayfarer is that this equity has been hurting for some time. But they specifically came out, you know, if I go back 6 months, it was at 134. It's at 61. And if I go back, 173 is the high. That high, so this has been getting smoked. That March 19th, March of 2019, this came down hard. So they have more problems than just China factories. But what they did do is that when they did come out, more than half of this stuff comes from China. Bottom line, look at that. Wow, Wayfarer losses in 2019 were nearly $1 billion. I got to look at this. I can't understand how these companies can lose this much money. Look at this. This is intriguing. Wayfair has never made any money. That is so wild, man. Every year. Now, this year, they plan on losing $8.97 a share. That's on volume of $10.9 billion. Just doesn't make any sense, man. And if you've ever been to Wayfair, folks, it's amazing that they're losing money because Wayfair, you know, to me, it seems like their prices are basically too expensive. You know, they get very expensive prices from a lot of the stuff they have. But guess what? They still can't make money. So that in itself is a huge heads up. We're going to take a look at ExxonMobil. Let's see, you know, the oil contract. Well, actually, let's go look at the oil contract first because this is amazing. So what happened with oil out here, folks, is that they had much less of a build than they thought they were going to have. Oil gets up to 48, 41 and couldn't hold price. It's amazing, man. This oil market just continues to want lower price. In spades, too. Now, this is like serious business as to, it looks like 42 is your next level. We put this on a generic chart and put it back 15 years right now. Yeah, 42.36. Where we hit 43.32 thus far this month. It wants to go hit that baby. Stay right there, folks. Come right back. Dow Industrials right now trading up. Where are you? 1,098. Nasdaq's up 297. S&Ps are up 122. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 1,117. Nasdaq's up 304. S&P's up 125. That's a gain, folks, in the Dow Industrials, 4.3%. Pretty amazing. S&P's and Nasdaq, 3.8%. Bonds. Now, check this out. This is what's really amazing, is that we have a gain in the marketplace today that's extraordinary, right? The bottom line is that the 10-year can't even get sold off. The 10-year is flat at 135.31. That is so unheard of, folks. And what has happened inside the note and bond market is this. Every time that the market accelerates on price, even big like this, you're seeing the note and bond market be flat, slightly negative, nothing like bottom line if you're basically looking at the fundamentals of how this normally works. That is just saying and showing flat out that notes and bonds are that strong and that they actually have that many buyers when you have a broad market that is up this dramatically, and bottom line is that you can't even sell off the bond market. You know, and then what ends up happening, of course, every time that the broad market goes down just slightly, bonds take off like a rocket ship, you know. So we'll see what ends up happening when this ABC structure finishes inside of the 10 as well as the 30. But It looks to me that the baby is not only still in place, but it is still in place in an extraordinary way. And what that means, folks, is that we just have more money chasing notes and bonds. And, you know, those rates, as the more money chases them, of course, the rate structure keeps going lower and lower and lower. We take a look at the volume characteristic out here today inside the NYSE. Oh, this is going to be interesting. Oh, this is short volume. Oh, man. Okay. You better be ready for tomorrow, a little downdraft. Inside the NYSE right now, folks, we're only at 869 million. We're going to do 1.2 billion or something, but we've been doing 1.8 billion. Inside the NASDAQ composite, we are at 3.1 billion. We had 4.3 yesterday. The composite will come in with some juice, but that NYSE is a heads up, no doubt about it. Always remember, folks, whatever you think about, you bring about, whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Come join us tomorrow morning, 8:30, morning market kickoff. Go get it, folks.